The Central Bank of Nigeria says it disbursed about $7.6 billion into the official foreign exchange market between January and May this year through sales to authorized dealers. And I have Oluseyi Akinbi, the MD of Zedcap Partners. He joins me to discuss the dynamics at play in Nigeria's foreign exchange market. Now, thank you so much today for your time today, Sheyi. Quite a lot when you look at what we're seeing play out with FX here. But I'd like to more or less get a summation from you in terms of the activity and the CBN's interventions into the FX markets, basically.
All right. For this year, the CBN has continued to manage its FX resources. Coming from last year, where they banned the BDCs or they stopped intervention to the BDCs, and then they started channeling some of these resources, to the real sector. And starting this year, the CBN has continued to toe that line. There've not been any differentiating factor in their mode and means of intervening in the market. So on a weekly basis, they intervene to the volume of around $20 to $25 million to the invisible and the SME space. And just of recent, they started selling to the foreign portfolio investors also in order to clear the backlog of their proceeds from the system. So the CBN has just continued to use the demand management strategy to conserve the resources in the absence of serious accretion to the reserves from crude oil sales, and also the absence of considerable inflows from foreign investors.
Because we've seen those oil theft cases now more or less impacting the country. We're not producing at the levels that we should be. First, we're not meeting up the quotas set by OPEC, and it's been a sector that's been heavily challenged this year. But it's quite a lot. But now we're seeing that ripple effect play out in other sectors. Case in point, the airlines more or less. But though we saw that release of 230 million to this special FX intervention to the airlines. But more or less, how are you seeing interpreting how we're seeing this play out and the ripple effect we're seeing play out on other sectors?
Yeah, I think the CBN is clearly challenged, and I think the main issue right here is the exchange rate, right? And the CBN has continued to they run a fixed peg exchange rate where they've pegged the FX to between 415 to 430, depending on the markets you are looking at. And even in these CBN markets that we are seeing, we see that the CBN is intervening at different rates. They sell the PT and the BTA at around 419. They sell to exporters and the real sector at around 465. They're also intervening to the foreign portfolio investors between the range of 453 to 465. So the CBN has not been able to fix a particular rate of exchange, and because of that, we've seen the parallel market also depreciate in that manner. The spread between the official market and the parallel market continues to expand. At the moment, it's close to 250 naira, and because of that reason, you won't see any sensible person bring their dollars to the official market to convert, saying that they can get better rates on the streets. So we believe that the CBN at this point needs to come to terms that they don't have the resources to continue to intervene, right? And we believe that at the right price, right, then we'll see inflows come back into the country.
It's quite a lot we've been dealing with this year when you look at the economy, basically, and now we're also seeing inflation as well becoming a problem here, although it's a global problem right now. We're expecting data from the US today on inflation coming in later today, but also Nigerian inflation figures also for the month is also expected this week. What's your outlook for inflation in Nigeria, and what do you think the monetary authorities can continue to do to address this challenge?
All right. Okay. The CBN was rigid starting the year. They dug their foot in the ground, and they sort of maintained their policy parameters for the first half of the year. But going into the second half of the year, we saw the CBN take a turning point where they increasing the monetary policy rate from 11.5% to 14% at the moment. And then largely in the past 2 to 3 months, they've remained extremely contractory in terms of liquidity to the system. And of course, all these things we are saying, are all they are doing to make sure that they continue to combat inflation, which, as you alluded to, is not a Nigerian problem. It's something that we've seen across the globe. And our outlook basically for inflation in Nigeria is that, we will continue to see inflation trend higher. The last print was around 19.6%, and we see the next print cross 20% coming at the end of the week. The CBN reaction basically will, they will have to continue to tighten, the policy. We expect another 50 to 100 basis points in interest rate increment in order to continue to fight inflation. And hopefully, with every other thing that they are doing alongside, we expect inflation to trend low before the close of the year.